Your 1099 says $24,000. The side hustle account has $1,900 left. It is late January and both numbers are on the kitchen table. One is printed on a 1099 NEC. The other is open in your banking app. You type $24,000 into the tax software and click Continue. The refund estimate disappears. The screen now says federal amount due, about $4,300. You stare until the screen dims, then tap it awake. You close the software. You open it again. The number returns. On your phone, a small furniture order from last week still says processing. You cancel it. You transfer the remaining $1,900 into checking. Then you reopen the tax page. You decide to finish the return before you leave the kitchen table. The software asks for expenses. You pull a drawer of receipts onto the table. There is a used laptop, editing software, storage, and costs tied to client projects. You enter the documented business expenses one by one. The balance moves, but not far enough. Even after those expenses, the amount due is larger than the cash available. Beside the computer, the calendar shows another estimated payment date ahead. Money earned last year has started pressing on money you have not earned yet. The canceled furniture order appears in your email as a refund pending, but it cannot close the gap. The transfer has also changed the side hustle account from a small reserve into an almost empty shell. Minutes ago, the account felt like proof that some freelance money had survived. Now it shows that even the money left behind had already been assigned another job. Nothing happened in one dramatic shopping spree. There is no photograph of a reckless weekend. No luxury purchase explains the missing $22,500. Your camera roll shows something less satisfying. The used laptop on the day you brought it home, a repair shop waiting room, software renewals, and ordinary months when freelance payments filled the space between your W-2 paycheck and the next round of bills. Go back to the first client, almost a year earlier. You have already worked a full day, eaten dinner, and opened a video project after everyone else seems to have stopped working. The client approves the cut 2 nights later. You send the invoice. A few days after that, $800 appears. It arrives without a pay stub and without a line for federal withholding. There is only the deposit. You tap the deposit and compare it with the invoice. The numbers match exactly. The payment feels complete because the client has completed their part of the exchange. You delivered the edit. They sent $800. Nothing in the transaction window tells you that the client payment and your final personal tax result belong to different stages of the money's life. The bank does not display gross receipts, net profit, income tax, and self-employment tax as separate emotional experiences. It displays a balance. That week, the balance solves a real problem. Your old computer freezes during exports and a crash nearly costs you a deadline. You find a used laptop that can handle the work. Hey, it is not a status purchase. It is the machine that makes the next invoice possible. When you buy it, the withdrawal feels connected to the work. The payment seems to have completed its purpose. Months later, at the kitchen table, that memory has become a receipt. You enter it, answer the software's questions, and add the other documented business costs in this fictional return. The number falls, but it does not fall to zero. A business expense can reduce the business result without making every dollar spent somewhere else disappear from the tax picture. The $24,000 on the form represents gross receipts, what clients paid across the year. It is not salary, profit, or take-home pay. In this story, about $5,800 in documented business expenses are entered before the software reaches the business's net result. You did not experience the year in categories. You experienced it in notifications. $400 after a short edit, $1,500 after a difficult project, a late payment arriving on the same morning as rent. Every deposit came with a client name and a small sense of relief. None came with the structure of a W-2 paycheck, where withholding makes part of the money absent before you can miss it. The software subscriptions followed another rhythm. They renewed quietly, often between projects. Each charge looked small beside the client payment that justified it. Now those charges have to become records instead of memories. You open the subscription history and match each renewal to the bank statement. The work is slow. The amount due changes only after the documentation catches up. By summer, the side hustle account no longer feels completely separate. It still has its own label, but it has become a pressure valve for the rest of your life. When checking runs low before payday, you move $300 over. When rent rises, a client payment closes the gap. When groceries cost more than expected, the side account makes the week work. Most transfers barely register. At first, the account means equipment and software. Later, it means anything your regular paycheck cannot comfortably reach. The money remains traceable, but its job has expanded. One night, rent is due in the morning, and the account holding your W-2 pay is short. You move $400 out of the side hustle account. The transfer is labeled only as to checking. It solves the immediate problem. The next client approval refills the account, so you do not revisit the transfer. Every withdrawal answers a current need. Under that pressure, keeping part of the money beyond reach can feel less like planning and more like refusing useful cash while a real bill waits. The account still looks separate in the banking app, but psychologically, it is merged with ordinary life. Then the car needs repair. The estimate arrives after you have already used the car to reach your W-2 job. Leaving it at the shop is not optional in any practical sense. The invoice is large enough to erase several smaller client payments at once. You use side hustle money because that's the cash available. The repair invoice is next in the pile, but you leave it unclaimed. It helped you keep working, yet this fictional return does not automatically treat a personal car repair as a business expense. Money can be necessary to your life without being a documented business expense here. Needing something and being able to claim it are not interchangeable. You find the repair in the bank history. It sits between a client deposit and a grocery charge, exactly where ordinary life absorbed the side hustle account. You leave it unclaimed. The amount due does not respond. You continue through the receipts. Software subscription, entered. Storage, entered. Costs tied directly to client projects, entered. A household expense that never became a business record, left out. The pile gets smaller while the amount due shifts in increments. Each accepted expense brings a moment of relief. Each remaining dollar restores the same fact. Reducing net profit is not the same as erasing the filing result. The result on this screen is about $4,300 due federally for one fictional person. It appears after the complete W-2 household information and documented business expenses have been entered. It is not $24,000 multiplied by one rule that applies to everyone. Another person with the same gross receipts could have different expenses, withholding, filing status, deductions, credits, and state rules. You click back to the W-2 section. For years, that form has made taxes feel mostly automatic. Your employer withheld money from every paycheck, and the filing screen often showed a refund estimate. You came to think of that estimate as part of tax season, almost like a delayed spring payment. This year, it appeared at first, too. Then the 1099 was imported, and the meter crossed through zero. The expected refund is gone before it reaches your bank. That loss feels sharper than the side hustle deposits felt good. You had not received the refund, but you had already pictured what it might cover. Now, the software has removed imagined money and asked for real cash in the same motion. Loss aversion helps describe that emotional force, but it does not create the tax rule. The practical structure came first. Withholding had been attached mainly to your W-2 wages. The client payments arrived without an employer withholding from each deposit. The emotional reaction appears when those two streams meet on one return. You scroll upward as if the refund might still be hiding above the 1099 entry. It is not there. Instead, the software shows the business income and the expenses you entered. The gross number has become a net business result. The complete return has become an amount due. Self-employed people may generally deal with income tax and self-employment tax. Some taxpayers use estimated payments because federal taxes are generally paid as income is received. Those are broad federal principles, not a shortcut to this $4,300 result. You print the income summary and place it between the W-2 and the 1099. The W-2 shows wages and withholding in separate boxes. The 1099 shows what a client reported paying for services. The software summary shows the result after the rest of your information was combined. 3 documents describe related money, but they describe different stages of it. You look at the calendar reminder beside the tax window. Earlier in the year, estimated payment dates felt like administrative background. They seemed intended for people whose businesses looked more official than yours. You had a regular job. You edited videos at night. The work was real, but it did not feel like a company with a finance department. You open the calendar and add the next estimated payment reminder. The act takes 10 seconds. Its effect is larger. The date now occupies a visible square in a future month, beside work meetings and a family commitment. You are not calculating a universal payment or choosing a tax strategy. You are seeing that the current balance is not the final scene. The reminder changes the calendar before it changes any bank balance. A month that previously held only work and family obligations now contains a claim connected to income earned on another schedule. The deadline is no longer hidden inside a government page. It has entered the same visual space as the rest of your life. Earlier, the dates were easy to ignore because they had no receipt, invoice, or client name. They were simply dates on a page that sent no personal signal. Now, one is in your calendar. When the notification arrives, it will not only be asking for attention, it may be asking for cash. The late partner finally takes a seat. It is a narrative metaphor, not a legal or IRS term. It describes an obligation that existed in the structure of the income, but remained absent from the experience of receiving it. What arrived late was not the rule, it was salience. During the year, every client payment was vivid and every future obligation was abstract. The laptop was visible, the rent deadline was visible, the broken car was visible. The filing result was not visible inside any single deposit notification. That delay allowed the complete payment to feel like available cash. A W-2 paycheck commonly reaches you after withholding has already changed the number you see. A freelance payment may arrive before that separation has happened. When both enter the same financial life, they can feel like equivalent units of spendable money. But their paths to the tax return are different. The illusion does not require ignorance. It only requires one number to be immediate while the other remains distant. You open the bank export again. The $24,000 did not arrive together, and it did not leave together. If one check for $24,000 had arrived in February, it might have looked unusual enough to demand a separate decision. Instead, it came in pieces sized like solutions. One payment covered the laptop, another softened rent, another met the repair. Smaller payments disappeared into ordinary weeks. Irregular income can make a year feel richer without making any single month reliably richer. In strong months, the deposits raise what is available now. In weak months, that extra money is already missing from the plan. Without a stable side hustle paycheck, yesterday's good month can quietly finance today's ordinary one. You sort the bank export by client name and add the deposits again. The total reaches $24,000 through amounts that feel more familiar individually than together. Some belong to projects you remember immediately. Others require opening an old invoice. The form's single field has compressed a year of evenings, revisions, and approvals into one number. That confirmation removes one hopeful explanation. In this fictional case, the 1099 is not showing money you never received. The deposits are there. The discomfort comes from seeing them compressed into one annual amount after you live them as separate answers to separate pressures. A client message appears while the return is still open. They have another editing project and ask whether you can deliver next week. 6 months ago, the message would have contained one main fact: more income. Tonight, it contains two. There is the new project, and there is the unresolved balance already sitting on your screen. You accept the project and look again at the calendar. Accepting it does not restore cash that has already left. It creates work in the coming week and a payment sometime after approval. When you open the project folder, the amount due screen remains visible behind it. Future labor has become part of the consequence of last year's delayed split. The work is still worth doing. The tax screen has not turned the side hustle into a mistake. The laptop helped you meet deadlines. The client relationships still matter. The money repaired the car and covered ordinary life when your paycheck was stretched. The story is not that earning more made you poorer. It is that the full deposit repeatedly looked like the final, spendable form of income when it was not. Now the shortage narrows future choices. The canceled furniture order helps, but only slightly. The $1,900 transfer helps, but it does not equal the amount due. Future W-2 paychecks already have rent, food, transportation, and other obligations attached. Future client payments are no longer only extra capacity. Part of their psychological job has changed before the projects are completed. Old income is taking choices away from income you have not earned yet. You cannot return last summer's groceries. You cannot undo the repair or recover the rent transfers. Even legitimate business purchases cannot be converted back into their full purchase price. The spending was reasonable when it happened. Reasonableness does not return cash to the account. You finish the filing interview and stop at the review screen. No villain is required. The clients paid what they owed. The bank displayed the money it held. The software changed as information was added. You responded to the most visible deadlines in front of you. The gap emerged because the payment moment and the consequence moment were separated by months. That separation is also why shame is a poor description. Shame imagines that a distant obligation should have felt as urgent as a broken car in the present. It rarely does. Present bias gives immediate needs more force. Mental accounting allows an account's purpose to expand as life applies pressure. These ideas do not change tax law. They explain why ordinary withdrawals can accumulate into a result that feels sudden. A week later, you complete the new client project. You send the file, receive approval, and issue the invoice. The sequence is familiar enough to feel automatic. Then the payment arrives, $1,200 from the new client. The same banking interface displays the same kind of available balance it displayed all year. For the first time, you do not read 1,200 as one number. You see payment for completed work. You also see that the complete amount is not the same thing as a settled personal paycheck. The eventual result still depends on the full return, including business expenses, other wages and withholding, filing status, deductions, credits, and applicable state rules. There is no universal side hustle percentage inside this scene. The notification is still satisfying. The project is complete, the client approved it, the payment is real, but satisfaction no longer closes the accounting story. The amount now carries two time horizons, what it can do today, and what may become visible only when the year's income is combined with the rest of your return. What changed is not your opinion of the work. It is the timing of the split in your mind. The possible obligation no longer appears only after every urgent bill has spoken first. It now has a visible seat when the payment arrives. That does not resolve the existing $4,300 balance in one move. It changes what the next dollar is allowed to pretend to be. You place the new payment notification beside the old 1099. One shows a fresh amount in motion. The other compresses an entire year into $24,000. In January, the form seemed to reveal a bill that appeared after the money was gone. Now it reveals something more precise. The money was real when it arrived. What was delayed was the split. That is why the illusion was so believable and so expensive. The system did not separate every client payment before it reached you, so the complete amount kept presenting itself as available life money. It paid for real tools, real repairs, real housing, and real food. Then a later document gave part of that same history a different claim. The side hustle was not false income. The balance was not a moral verdict. The costly mistake was letting gross cash arrive with the emotional authority of take-home pay.